This week has been disastrous for the altcoins, but there's one altcoin that's shining above all, and that is AIC, so AI Companion. The question is, how much longer can this rally last, and what's causing the rally? Let's have a look at the on-chain metrics, the data that most people are not looking at. Today, AIC is up almost 50%. This week, where we saw mainly value destruction, we still have seen an increase of more than 250%. And since listing on CoinMarketCap in September of this year, we are up 2,700%. What's going on? The data is somewhat conflicting. So on X, or formerly known as Twitter, we've got 70,000 followers. However, in Telegram, we only have 4,000 members. Now, this doesn't really match up. Normally, the ratio between the Twitter followers and the people that follow in Telegram isn't that large. There isn't normally such a big difference. Now, AI Companions is a recently launched project, and so they've got an updated roadmap. The website doesn't really instill too much confidence. There's nothing really said about the team and advisors besides just generic text. And apparently, there is 70% of the token supply provided for liquidity. Now, the main chain for AI Companions is the Binance Smart Chain. And when we search for that token address, we see liquidity on chain of only $2,800, while the market cap is almost $500 million. So the liquidity that's mentioned on that website is definitely not on chain. It's probably with the centralized exchanges. Nevertheless, the price development on-chain is of course very nice, since there are arbitrage bots between centralized and decentralized exchanges. So whenever the price goes up on the Maxis and Gate.ios of this world, it's also going to go up on-chain on the Binance Smart Chain. Now again, some numbers don't really add up. On-chain, we've got more than 10,000 holders. 10,931 to be exact. Again, while the liquidity is pretty much non-existent. And when we look at the number of new users versus returning users per day, we're seeing how this is actually declining since beginning of February, while the price is definitely not declining since then. We can see how the attention moves in waves, right? This is a number of buyers and sellers over time. And it seems like whatever happened here in the middle of October of last year is not natural. There was suddenly so many buyers, and this probably pushed up the number of holders on chain quite a bit. Now, are those all just bot accounts that only hold a few cents of the token? How many wallets actually have, say, $1,000 worth of AIC? Here again are the on-chain metrics. On the left side, we see the number of wallets that have at least 2,000 AIC tokens. So at the current price, that's roughly $1,000 worth of the token. For the chart in the middle, we go at 10x in minimal holding. So that's now 20,000 tokens or $10,000 worth of the token. For the chart on the right, it's another 10x. So that's now $100,000 worth of the token. We can see clearly a difference in the trends. We can see how small retail tended to sell their tokens with the rally. We see how medium-sized retail continued holding. And we can see how the large whales, they went up in numbers. They accumulated. Still, the number of holders on chain is 11,000. And there are only 150 wallets that hold more than $1,000 worth of the token at current prices. There's clearly an inflation of the holder numbers happening. I do not believe the number of holders on chain, and I do not believe the number of followers on Twitter. I believe that the organic size of this project is much, much smaller. Still, for whatever reason, the smart money, the whales, they are buying in. Now, in the end, it doesn't really matter what kind of altcoins we chose, right? Pretty much everything went down. So it seems like it's more important to time the macro than the micro, right? The individual asset selection isn't that important. It's more important to exit when prices are high and to buy when everything is depressed. But then the question is, how much longer could we fall? What we see over here is the Bitcoin dominance. So how much of all of crypto is in Bitcoin? And that tends to oscillate somewhere between 40% and 70%. When it moves from 70% down to 40%, that means that Bitcoin becomes less important, and that means that the altcoins are massively outperforming. However, when Bitcoin's dominance is going up, that means that Bitcoin holds up relatively well. It can perform better than the alts, and it might make sense to rather be allocated towards BTC than towards the altcoins. Now, how much higher could this go? Again, this moves between 40 and 70%, and currently we are at 62%. So another 8 percentage points, potentially a bit more than that. I also like this measure over here. This shows how much are the people short-term bearish on crypto. How much are they risk off? This graph shows the stablecoin dominance. So not the Bitcoin dominance, but the stablecoin dominance. How much of all of crypto is in stablecoins? When this is very high, then the market is spooked. Then nobody is in anything risky. And when this is very low, that's the exact opposite. The market is very, very excited and wants to buy all kinds of meme coins left and right. And there is a very strong connection between the prices, right? An inverse relation. When the stablecoin dominance was at its peak, that was when Bitcoin bottomed out at 16K. When the stablecoin dominance was at its bottom, that is when Bitcoin didn't rally that much anymore. And once we saw a similar bottom in the stablecoin dominance again, Bitcoin's price also tended to not rally that much. Now, are we going to go sideways for a bit longer to then go up again, or are we going back into the 80s, 70s and 60s and revisit those stablecoin dominances of 18%? Nobody knows. But this does give us an idea that this is potentially just the beginning of the market cooling off. The market historically had been way more risk off than it is today. Yes, I know that's hard to believe when a lot of altcoins are down more than 50%, but there have been times when people went even more into the stablecoins. And that, of course, would mean more pain ahead. Now, here's what I believe is ultra important during times like this. When it's not really clear where the market is going, we need to have a plan what to do in case things turn around. The issue I see with most beginners in crypto is that there's only a plan for bull markets, right? When there's a bull market, we follow the influencers, we try to track those influencers, we try to buy small altcoins, and we hope for those altcoins to make multiple X returns. Now, when the market turns around, when it turns bearish, then the question is, what should we do? And if there is no plan, then people simply just keep on holding those altcoins and riding them all the way down to zero. So it's very important to have a plan what to do in case the market doesn't expand further from here. To be completely objective, right? Because if there's no strategy what to do in a bear market, then the issue is that there won't be anything, right? Then you will simply just freeze up and do nothing. There are opportunities in bear markets. I actually think that it's easier to make money in bear markets than it is to make money in bull markets. For example, have a look at this. This is Balancer relative to Ethereum. This goes down pretty much all the time. And I started shorting this over here at the beginning of 2023. Now, this is a relative valuation chart, right? This is not Balancer in US dollars. This is Balancer relative to Ethereum. And so the volatility is relatively low. BAL underperformed Ethereum by more than 84%. And Ethereum didn't do that well either. And the reason why some of those altcoins go down that consistently is because of supply expansion, right? More and more tokens hit the market. Some tokens get allocated to early investors or to the team. They then get an unlock, they get a vesting unlock, and they can then sell towards the market. And this additional supply over time depresses the price. This is why we see those bad relative valuation charts, but we can take advantage of that by betting on falling prices on relative valuations. Have a look at this, right? This is Arbitrum relative to Ethereum. Also pretty much going down all the time for the exact same reason. And so if you have never shorted an altcoin before, if you never made money with an altcoin going down, or if you never made money with relative valuation short, so you just bet, say, on BAL or on Bitcoin going down in US dollars, but you never really played this relative valuation game where the volatility is much smaller, then probably you're missing out on a lot of potential alpha. Most altcoins underperform Bitcoin most of the time. So we can pretty much diversify with short positions. With longs, that is not so easy, right? When we buy an altcoin, there's maybe one or two altcoins that go through the moon and others just go along and they're not outperforming that much. So we have to pick the few winners. But with picking losers, it's not that hard because, again, most altcoins underperform Bitcoin most of the time. And so I made a lot of tutorial videos on this concept. First of all, how to think about this in the portfolio, but also how to execute on those individual trades and how to find find tokens that underperform Bitcoin and Ethereum the most consistently. So there's this video over here, how to win in bear markets by shorting altcoins. There's this one, gaining from relative valuations, so not in US dollar prices, but in relative underperformance to Bitcoin and ETH. There's here, shorting optimism relative to BTC. That video was published on the 5th of May 2023. So over here, since then, the price went down by 63%. And yeah, there are also more conceptual videos where I'm making nice drawings, how to profit from falling prices, how to deposit collateral, how to borrow against this, etc. Then here's another video, my steps for opening a link/BTC short. Chainlink also underperformed Bitcoin massively since then. And so if you don't want to get wrecked like the vast majority of market participants during a potential bear market, I'm not saying that the bear market has already started, but in case you don't want to get wrecked once it does start, there will be a time, then feel free to check out those videos here, right? They're all part of Premium. Premium has more than 100 tutorial videos. It's not just about shorting altcoins, it's also about managing risk and how to be properly set up across asset classes. So feel free to check it out. It's currently $165 per month. There's also a 1-week money back guarantee. So in case you don't like Premium, in case you don't learn anything, then feel free to message me within the first 7 days and I will refund you 100%. I know this price is not very low, but it might be low comparable to the potential losses you might make if you don't have a strategy for bear markets. Now, does it make sense to buy AIC right now after this rally? How much more potential upside is there really? Let's have a look at some data. We've already seen how the price discovery does not happen on chain. Instead, it happens on the centralized exchanges. Only 0.3% of trading volume is on PancakeSwap. Most trading volume happens on Gate.io and MEXC. And on top of that, we've also got bets on the price via perpetual futures. That's dominated also by MEXC. So it appears as if Gate.io and MEXC have those 70% of the supply. They can dictate where the price is going, and at the same time, MEXC offers bets on the price. So this is like you're a sports betting house, right? You offer bets on the outcome of, say, a football game, but at the same time, you've got significant influence on the outcome of the football game because you've bought maybe the referee. If you own most of the supply and you can dictate where the price is going, and you at the same time offer bets on the price, then very likely what's going to happen is that when enough people bet on rising prices, then the market makers will crash the price and vice versa, simply to make money from those liquidation fees. Now, the manipulation has a ceiling, and that ceiling is dictated by how much liquidity can go in and out of the token. Now, AI Companions has a market cap of 490 million, but the question is, how inflated is that market cap? How much of that money is actually in the hands of retail versus how much is in the hands of the market makers, right? If the market makers have pretty much all of the supply, then the market cap can get inflated into infinity, right? It can become many, many billions of dollars, as happened, for example, with Dogecoin. Let's say you hold 1 million tokens, but only a few tokens are held by retail. If then just a few of those retail tokens get bought up from retail, right? If you buy from retail, then suddenly the market cap goes up massively, while you didn't need that much capital in order to inflate the market cap. Again, because most of the supply is illiquid. It's in the hand of those few people. The few market makers have all the supply. The few market makers have all the power about manipulating the market cap. And so could AI Companions become the largest AI meme coin? Could it beat Fartcoin? Yes, I believe it could easily do that. Just have a look at the 24-hour trading volume. It's way, way smaller than of Fartcoin. This is a very, very illiquid token. This can go up by 2 or 3x tomorrow. It could also crash by 50% tomorrow. The issue is, of course, the overall altcoin market. The Ethereum dominance continues to go down, and there is a lot of correlation between the altcoins and Ethereum. That correlation is, of course, weaker when there's very little liquid supply, and then individual altcoins can get manipulated. But at some point, that manipulation will also stop. I'm personally staying away from AIC because I don't see any way to predict where the price is going. We would have to put ourselves in the head of those people that manipulate the price, and that's impossible. This is not a naturally occurring rally. This is completely in the hands of a few people that say up or down, and then we just have to guess what they're saying. I personally prefer to make bets on assets that have actual real growth, where we actually can use the data with some kind of certainty, right? Where we have some kind of nice aggregated data and where we know where overall retail is going and where the capital flows are going. If you got some value out of this video, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in premium. Cheers.